Good morning, everybody. It is Tuesday, June 10th, and we are going to do a review and prep for today for the markets. First, we'll show you the easiest 1,000 on micros or the easiest 10,000 on minis. We laid this out yesterday at 8 a.m. We posted this for our subscribers, so Eastern, so an hour and a half before the market opened. And it was a slow day, but we did say on the ES long 6,004 half up to 26, and on NQ long 790 to 878. And so we had our move from 790 here. You had two possible entries, one just after the open and one in the afternoon, and right up to that 890, 878 target. You would not have been stopped on this. Easy 100 points. So on two micros, $400 a couple times in a day. That's $800 to $1,000. On a mini, that's 8,000 to 10,000. On to ES, where we said 6,004 half to 26. Just about high a day. High a day yesterday was 27 three quarters. So we missed the high by a few ticks. But easiest trade. And instead of wearing yourself out scalping or constantly trading the back and forth, just put your money on at risk and collect the thousands that are coming to you. Again, a 20-point move on the ES on two micros, that'd be $200. You could trade a little bigger size since it's less volatile. But even then, $200 on a couple of minis, that's $2,000. You should be able to generate very well with this system and the understanding. So with that, let's go ahead and get started on today. First, a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. We will start off, just a quick recap here on our COT report. On the ES, so the SPX, we still have a net long position, so commercials can still distribute at higher prices, which we are seeing this week as the market continues its push higher. High yield is still not signaling anything. Complacency is taking hold, nothing recessionary. So we'll still watch 3.5, but it's going to be a little while. On the corporate debt side, so the triple B spreads, again, we watch this for downside risk as well as shifting risks overall in the market. And likely we won't see anything begin to tick up here until June 23rd, once the business cycle ends. So we'll be watching 1.18 for a move higher. That would tell us potential downside in the market. Right now, again, we are seeing complacency. Now, remember, the triple B corporate is for your higher beta stocks. On to the move index. Again, we saw that we were nearing max complacency and we saw a bounce. So nothing surprising there on bond volatility. However, this really won't shift until after CPI, PPI, or FOMC. And again, as we mentioned yesterday, with the business cycle ending next Friday, ball underwater scenario is in play here. On to the VIX and cross asset vol, we did see a stabilization yesterday. On the VIX itself, we'll be looking for 1637. That's what we'll be paying attention to into the coming days to see if it comes down there. Do we break under and signal that we have more upside forced flows coming in? Or do we hold that? And if that starts to tick back up, again, that is going to trigger the next leg lower. And that would be also factoring into our systematic and algorithmic strategies when they really return to the markets in about a month, about 3 to 4 weeks. And on the Vixen, if you are watching that, you are looking at 1878. If you're trading the Nasdaq, you need to know where your volatility is. On to our insurance in the market, complacency. That's the theme of the week right now, still showing. So watching today for a bit of insurance to come in and put some downward pressure on the markets. We did get the business optimism index early this morning, which saw an uptick. We are going to be watching. There were a few additions to the calendar this morning with the Secretary of Defense and two POTUS additions to the calendar. So we could see that coming in earlier. However, we'll be watching around 12:30 and 2 o'clock, and then 3:15 for these really to change as there are increased flows at those time, as well as that is when everybody will start seeing the storm clouds and begin needing to protect themselves. So We want to be watching for our washing machine tomorrow for CPI. This is going to give us what the trade is going to be on CPI. We are expecting an uptick on inflation, and that is supported again for next month for a higher uptick as well as we are seeing oil tick up. Oil is a large factor in the inflation readings. Don't forget that. And as oil has been rising, that is even with everything else staying equal or even coming down slightly, oil will trigger a higher push in inflation. Um, Systematic and algorithmic, again, are still just minor participants, and we have a few weeks before larger flows begin triggering. So, with 80% of their capital on the sidelines, that's about $400 billion sitting on the sidelines of the markets just in one strategy. But again, these are deployed through algorithms and rules-based instead of discretionary. So no changes will be coming here for a little while. On our active investment manager side, we are almost inverse to this. We are about 80% invested with 20% of capital on the sidelines, whereas our algorithms and rules-based trading are 20% invested with 80% of their capital on the sidelines. So for today, on the ES, so when we look at what's been happening, we always want to measure things in terms of the speed and the rate of changes in what is occurring. And you can see here when we start seeing our rates of change begin signaling downside, we get the white and then we get the bigger down move. Now we watch when the risk begins coming out of the market, and that is pushing us higher. And now we have some small signs of risk coming back in, but again, more complacency. So on to the ES today. We are going to be looking for rotational price action from 59.74 to 60.32 half with our pivot at 6,003 quarter. Our upper targets today are 60.61 half to 60.79. And at 60.79, we do expect a few $1 billion to come in terms of supply from the commercial side of the market. We can already see that sitting there. That is where we would look for an upside target today. And if it happens earlier in the day, then you should know what to do with that. If it happens later in the day, then be mindful of 4:15 p.m. Our lower targets are 59.27 and 59.45. So we'd first have to break our rotational low at 59.74, which will be a slight challenge. If we do come down, sitting right at our first lower target at 45, we have our major line in the sand at 59.47. Our minor line in the sand is 6,007, so that could push us lower if we break there. But again, use your own risk parameters, and my trades will be posted in our professional room for anybody that is a subscriber. Some other key levels for you today are 60.21, 60.42, 60.56 half, and then in the 59s, we have 59.92 and 59.65. On to the NQ. So we are looking for rotational from 21,654 to 21,927, and our pivot is 793 quarters. Our upper targets, we are now into the 22,000, so 22,063 quarter and 145. On the downside, our lower targets are 21,436 and 518. Our minor line in the sand today is at 950. Now that is key because that is exactly where we saw the supply get introduced last night. And that is where our market makers, even though they don't interact a whole lot in Globex as the volume is slow, they do have key areas they will defend. And 950 was one of those last night. That does not change after RTH closes. So we always want to be aware where these are. Now, our major line in the sand is below our lower targets at 21,377. So again, that is not likely going to be interacted with today. That is what we'll be watching if the market starts to turn in July. This line in the sand is going to be key for that. Now, other key levels for you on the NQ 22,106, 22,051 3 quarters. Then in the 21s, 21,916, 891, 773, 613 half, and 469. And again, my trades will be posted in our professional room. When we look at risk in the NQ, again, you can see when risk begins getting taken out of the market, we look for the upside. When it's been coming in, we see that downside. Risk is now fully taken out. And so in the short term, we are starting to see a slight change possibly coming. Again, we monitor this tick by tick during the day to see if that equation changes. Right now, complacency. Um, Not strong upside, but complacency, which leads to more upside. Again, slowly getting signs that this could be waning, but we don't anticipate. We react to what the market gives us and what it tells us. And right now, that is complacency and more upside favoring. On to oil. We'll start with our risk and then we'll go into the levels. Oil, again, we saw when the downside risks were coming and stacking up, and then we saw when the turn was starting to happen. We told you around 55 why that was going to be key in terms of Saudi Arabia stepping in. We mentioned that back here on the first dip in April, and then we had the retest at the beginning of May. And at the same time, what do you notice? All of our risk parameters start changing, and we get our move up, and we are pushing up towards 66 now on oil with an eventual target of around 67. So for today on oil, we are on crude. We're going to be looking at rotational from 64.53 to 65.68, which we are just a couple ticks over that right now. It's 65.71. Our pivot is 65.11. So on any pullbacks, watch for that to hold. Our upper targets are 66.25 and 66.58 today. So as of where we are right now, a little bit limited. Over the next couple of days, we should see those expand, and we'll be looking for about 67.09 to 13. Our downside targets, if we break our pivot and lower rotational zone, we're looking for 63.64 and 63.98. And lastly, on to gold. So we'll go opposite here. We'll start with our levels and plan. Rotational 33.32.3 to 33.83. Our pivot is 33.57.8. Our upper targets, if we break out of our rotational zone, will be 34.08 and 34.24.1. Our lower targets are 32.91.6 and 33.06.9. You can see we are right inside of our rotational zone right now, over our pivot, below our rotational high, so just oscillating there. And again, on gold, when we look at what has been happening in terms of risk, we see when downside risk starts to come in and when that risk starts to evaporate, and then we can look for those bigger moves up. Again, we are waiting for these to shift to give us another all-time high push. Otherwise, we are getting risk metrics stacking up that are saying that the short-term top is in, and we have seen those rotations in commodities out of gold and into uranium and silver. Silver had a big move last week, and we went over that with our students as to what would need to happen, why it happened, and where your sell points are from your long positions. So as always, guys, control your risk. That is first and foremost what you need to be thinking of, because you have to stay in this game long enough to learn your lessons and really begin to build out your system and your edge. If you are interested in learning how to build out an edge, check out our professional Discord as well as our courses that will be starting up in the fall. Have a great day, everybody, and we will be back tomorrow for CPI.